Very good evening, everybody, and welcome to another live stream by the Option School. This is your friend Pradeep Singla. So today we will be talking about how we can combine few option strategies so that we are able to tackle these complex markets. You see, markets are pretty complex. Yesterday we have seen market going up by almost 300 points, and today we have seen almost all the gains are erased in today's market. So it becomes very difficult for any option trader, especially option seller, to adjust his positions because we are seeing wild swings in the market on day-to-day basis. So when markets are swinging wildly, it it is extremely difficult that we are able to maintain a sufficiently wide range in a single strategy. What happens, let us say we have created a strategy which is, let's say, iron butterfly. Now we have a range of, let's say, 1000 points. Market goes up by 200 300 points, we shrink the trade. Then market goes down by 200 300 points, we further shrink the trade. So what happens in this kind of a scenario is that, okay, uh, in few sessions only the trade shrinks and the overall profitability range of the trade becomes very thin, and then chances of making any decent profit from that strategy also become very thin. So we need to do something so that we are not required to do these quick adjustments. In case we have started the strategy in the beginning of the month, and by, let us say, fourth or fifth session of the month, already we are shrinking the strategy to such a thin level that, okay, there is hardly anything left in the trade, although we may not be losing. But then unless and until you have a wide range in the trade, chances of making a decent profit are also reduced. So we need to do something so that we are not required to do this shrinking of trades, whether it is, let us say, iron condor, whether it is butterfly, whether it is iron butterfly, so that we can avoid this kind of shrinking, at least in the beginning of the uh, trading series. If it is happening in the fag end, then by that time almost we are already booking some profits, so we can do the shrinkage. But in the beginning it becomes very difficult, and then with these kind of moves you really do not know whether market will make even 1000 points move in one direction or 1500 points move in reverse direction also. So if you count the forward move as well as the backward move, the overall range required becomes very difficult. So these complex markets definitely require some advanced techniques so to tackle these kind of trades. Now we need to combine two or maybe more than two, but generally what I have seen that, okay, if you're able to combine two strategies for extending the range, it works wonderfully well even in these kind of markets. When I'm saying this, depending upon what kind of trade we have initiated, let us say we have initiated a trade which is fairly good up to 1000 to 1200 points. Now if we combine it with something else, we can able to tackle more than 2000 points move also in the market. I will also give you a little bit of a glimpse of what I'm talking about, right? So when you are combining two strategies, obviously then you need to know nitty-gritties of both the strategies. It's not that, okay, I know one strategy but second strategy is my adjustment strategy, and I know only the basic part of adjustment strategy. It should not happen. Whenever we are doing an adjustment, it should not happen that, okay, I am increasing the risk in the trade rather than decreasing the risk in the trade. So it's a sort of a double whammy whether I should combine it with second strategy, because once you combine it with second strategy, uh, there is, if you see the equation gets a little bit distorted, but yes, your range gets pretty much widened. So once your range is widened, chances of making profit always increase, right? Do subscribe to this channel if you have not subscribed so far, right? So when available range is large, no need to take any adjustment action even with fairly big moves. Now when I say fairly big moves, what we have seen in, let's say, last 2 days only, market has gone up by 300 points, market has gone down by almost 200 points. So these are fairly big moves if you see on day-to-day basis. But if we are seeing it on, let's say, on a weekly base, then what has happened? Upward move of 300 points and then backward move of 200 points means overall market has moved by only 100 points. So if I know this in advance that, okay, overall market is going to move by only 100 points, I would be better off by not doing an adjustment. But that is something nobody knows in advance, right? So yesterday when it has moved by 300 points, we might be expecting that today also it can make a further move of another 200 points, creating all the problems in the trade crossing the range of the trade. But so today it has gone down. So yesterday, if somebody has done an adjustment on the upside, mainly the adjustments is that you will bring your sold puts up, and today uh, things have reversed, so that adjustment would have been slightly uh, struggling, right? So main intention of combining it with other strategy is, so main intention is that okay, we are not required to do quick adjustments when market is behaving in a wild manner, right? So one of the possible combination, and you can say my favorite combination, is iron condor with calendar spread. Now, iron condor in itself is a very good strategy, and iron condor in itself takes care of a wide range of the market also. But this kind of market, which has like 800,000 to 1,500 points move within a month, can put iron condor traders into a little bit of issue. Although if you're following the adjustment techniques what we teach, there will be no loss, but then your profitability can be pretty small. So what can we do when we are trading with the iron condor, and then can we combine iron condor trade with something else so that the profitability increases, right? Let us see that. Now, let us say for the month of July, since we are just around 35 to 40 days in advance, we can create an iron counter. Suppose I'm creating this kind of an iron counter for the month of July. So what we have done here, we have sold 14,800 put and purchased 14,600 put, 16,000 call and 16,200 call. So here what we have done, we have kept a difference of 200 points, although generally we recommend a difference of 100 points. But since we are taking this trade well in advance, we can afford to have a 200 points difference. And what is happening is that okay, my trade is almost 50-50, 1 is to 1, almost 1 is to 1, and I have a very decent range of 14,703 to 16,097. That means almost around 1,400 points or 14 to 1,500 points range is there. But do you think this kind of a range is sufficient in this market? Write it in the chat window. Do you think this kind of a range is sufficient in this kind of market, the kind of market we are seeing right now, which moves like anything, right? Welcome, Mr. Ravidar, Mr. Gopal, Mr. Arnav, Mr. Uh, Ram Babu, Mr. Gunjan Agarwal, Mr. Arnav, how are you? So, as Mr. Prakash Verma says, no. So, this kind of range may or may not be sufficient. Most of the time, it may not be sufficient for the whole month, because market can definitely drift towards 60,300, 400, and it can definitely drift towards 14,400, 500 also, because these are high VIX markets. So, obviously, we can expect swings to be very high. So, otherwise we need to adjust the trade whenever market is touching this level or whenever market is touching this level. But if we do it pretty quickly, let us say market touches 16,000 in next 3 4 sessions, and even if July has not started, we are required to do an adjustment. So what will happen, this iron wonder will become thinner and thinner. With 2 3 adjustments it can become quite thin, so the range within which it will be profitable will get reduced drastically, right? So let us see what we can do. Let us say I will show you two scenarios. One is in case market touches it on the upside, then what will happen, and one is uh, market is touching downside, what kind of thing you can do, right? So first is, let's say protecting the upside risk. Suppose market keeps on moving upside, and within 3 4 sessions, so that is the trend of the market, 200 300 points in a day is nothing, right? So we are at 15,400. Next 3 days we can move up, and market is 16,000, right? And see, since this is a July trade, it has not even started. So obviously at 16,097 you are feeling the pinch. So what you can do, you can add a calendar spread. As I've said, I will be showing you iron condor with calendar spread. What we have done, we have added a call calendar spread on the upside as soon as the market is touching my upper break even point. With that, with a simple addition of adjustment trade into the existing trade, see what has happened. 16,838. If somebody can tell me what was our previous break even on upper level, now it is showing my break even on upper level is 16,838. But if you can tell me what was our original iron condor, and what was the break even point of the original iron condor, let me check it. It was somewhere close to 16. thousand. See this, it was 16,097. From 16,097, almost you can say 16,100, with one simple addition, it is adding 700 points to my trade, right? It may not add those many points at that point of time, because that time things will be slightly different, but if not 700, it will definitely add 400 to 500 points. So this gives me time to wait. Now I am not in a hurry that okay, let me do some quick adjustments in my iron condor, and let me shrink the iron condor, let me make it very thin, so that I do not lose on the upside. Because again, even in a good iron condor, when you start, the risk reward is 1 is to 1, 50% is to 50%, right? So here what has happened, once you have added a calendar on the upside, you've got a wide range, right? From now, if you see, from 15,400 up to 16,838, even on the upside you have got 1,400 to 1,500 points. So this makes it much more safer, right? Similarly, suppose it happens that okay, market starts drifting down. So on downside, our break even point in this case was 14,703. So if we see market touches 14,700 or 800, I can add a put calendar there. I can add a put calendar here, right? So what it will do, it will bring my break even point to 14,200 from 14,700, right? Can you see this? And good thing is, in the whole profitable diagram, we are nowhere going below the zero line. So that means wherever market expires from this level to this level, there will be some profit. Profit can be high or low depending upon different uh, market scenarios. But here, I would like to bring your attention to another point. If you see the original iron condor, it was showing me a risk of 5,132, right? 5,132 only. But if you see the adjusted iron condor, it is showing me a risk of 10,000 rupees here, and it's showing me a risk of 11,000 rupees here, right? But as you all know, calendar spread risk is not the real risk, right? So this is not the real risk. Yes, a risk increases by a small amount, but then again, the range within which the trade is profitable increases by a huge amount, right? Here now, the range is almost 1,800, 1,900 points. Even in the first case, the range is more than 2,000 points. So you're taking extra range from the market, so that you're giving a lot of space to the market, so that market remains within those 2 points only. You see, what is the probability that okay, market will remain within 15,000 to 15,500? Very less, right? What is the probability that market will remain within a range of 14,000 to 17,000? That probability is always very high, right? But only issue with these kind of trades can be in case market makes a wild move and it starts moving below this level, which is the adjusted level after adding a calendar spread. Then we need to be very careful that okay, when to remove this calendar spread. Suppose market once touches this level, and from there it start moving again back towards uh, 15,400 levels, then what we need to do. So when to adjust the adjusted trade? What is the adjusted trade in this? What is the adjusted trade? Adjusted trade, the repair trade in this is calendar spread. The main trade in this strategy is iron condor. The adjusted trade is calendar spread. Now, when to keep the calendar spread, when to remove the calendar spread, when to book profit in the calendar spread, we should be very, very clear on that. Only then we can combine strategies. Because as I said, complex markets definitely need little bit advanced methods of trading, right? But this works wonderfully well, and I'll say, if I take the liberty that most of the time, all the times or most of the time, you're able to get out of the trade with profit or without any loss. So what are some of the pros and cons of combining two strategies? I've given you just one example. There can be iron condor with iron fly. There can be iron fly with calendar spread. There can be multiple calendar spreads. So there can be different combination of different strategies. You can combine different iron condors also. You can combine different iron flies also. This is just one example which I found to be very useful in most of our trades also, right? So what is the pro? One of the pro is that range on the tested sides gets extended and giving us more time to stay in the trade, right? We are not in a hurry to close the trade or adjust the trade or shrink the trade. So this gives me more range, plus this gives me more time to stay in the trade as it is. Because if I give you example of last 2 days also, if somebody has done adjustment yesterday, he must be repenting it today, right? But then yesterday it required that it's his trades required that he has to do an adjustment. But today, the person who has not done adjustment yesterday must be feeling happy today, because ultimately market has almost gone to the same previous levels. So whether any adjustment will be good for you or whether any adjustment will be bad for you, you cannot say. So we are not going to do adjustment just for the sake of adjustment. As long as possible, we should avoid doing adjustment, because adjustments, most of the adjustments will reduce the profitable range of the trade. So with that aspect, I'm saying once you combine the strategy, it gives you more time to stay in the original trade. So by using the right adjustment for the main strategy, now that doesn't mean that okay, once I'm adding a repair strategy to my original iron condor, that doesn't mean that okay, I will not be making original iron condor adjustments. I will be doing that also. I will be doing iron condor adjustment at a later stage, but then I will be avoiding it. I will be allowing the markets to play here and there for at least first 10 to 15 days. That gives me a decay. That gives me a chance that okay, I can book profit and I can exit the trade also much earlier than expected, right? These are the two pros. And if you say one of the cons is that okay, margin required will definitely increase by a little quantity. Margin required will be different. Obviously, how much margin is required to add a calendar spread? Let me see, out of all of you who are there, can you tell me how much margin is required to create a call calendar spread? Any idea? So far, I have not getting any replies. So hopefully, most of you know that. Generally, you require roughly. Okay, thanks, Mr. Mukesh Kumar and Mr. Rambabu. Mr. Mukesh Kumar is right. You do not require 50,000 rupees. You require only 20,000 rupees. Uh, and sometimes if volatility is high, you require 21, 22,000 rupees. So most of the time, call calendar spread you are able to create within 20,000 rupees. So that kind of margin, so money management should always be in place. You know initially that okay, I might require this kind of money to make an adjustment rate. That is first con. Another con is adjustment of repair trade. So if you're adding a calendar, we must know what to do if market goes beyond the range of the calendar spread also. In the previous example, when the initial range was 16097, after adding the calendar spread, the range becomes something like 16,800. Now, what will you do in case, which will happen maybe once in a while only, that okay, from 15,400 market crosses 16,800, 16,900 also. In that case, what you are going to do with that calendar spread? It should not happen that okay, you're losing on the iron counter side and you are losing from the repair trade also. So we do not want a situation where we will be losing twice. So you should be very careful that okay, whatever repair adjustment trade I am putting into my original trade, I must know how to adjust that also, right? If you have any questions, you can feel free to ask me those questions. But yes, I can very rightfully ask all of you to please click on the like button. I'm not seeing many likes on the video, although I hope you are liking the video, but you're not taking that action. Please go ahead. There are no charges for clicking on the like button, right? What Mr. Rambabu is saying, few brokers take more margin since hedge is of farther month, their calculation isn't accurate. I don't think so. You see, this was a myth earlier with the few of the participants who had joined our client spread workshop. The margin requirements are more. No, you need to calculate properly. And sometimes it happens that okay, the kind of credit which you are receiving from selling of call or selling of put, that comes to your account the next day. So you need to wait for next day to actually calculate what kind of total margin is blocked by your broker, right? But it is very accurate. You have to pay something close to 20,000 to 25,000. That is when you are initiating an out of the money call calendar. But if that out of the money call calendar becomes deep in the money, then definitely the margin requirement will increase. Right? It all depends that okay, if you're getting a deep in the money, if your OTM call calendar has become in the money call calendar, so what happens is they are not giving you the benefit of purchased option, but they are definitely subtracting the loss on the sold option. That is why your calendar spread has become in the money. So if your sold option has lost, let us say 400 rupees, obviously your purchased option must have gained 380 or 360 or 370 rupees. That benefit is not available. So 400 into 50, 20,000 rupees extra debit they will put in your account. So once your OTM calendar becomes in the money, then margin requirement increases. But in case your calendar is out of the money only, there is hardly any margin requirement. Margin requirement will be roughly equivalent to 20,000 only, right? So you can download our TOS app now. Android as well as iOS versions are available. I am giving the link in the description, and you must be finding. I would like to take a feedback also from you. We are giving important Nifty levels during market hours to all the people who are there on our app. So we have a facility that okay, we can directly send you a message. So please go ahead and take benefit of that and download the app. Link is given in the description of this video, and we have given few recorded webinars and few recorded courses in that app also. And anybody buying that course, my request, please use this TOS 16 for 16% discount. There are a few participants who have not used this. You see, we have given this to make things much more beneficial for our subscribers. So please go ahead and use this TOS 16 code, and any of the strategies which you're buying on the app, it will be giving you 16% extra discount. Plus you will be getting some messages. Plus we have already done one webinar for our app users. We are planning to do at least one webinar especially only for our app users. So hopefully we will be able to add a lot of value to your existing knowledge during these live webinars. So go ahead and download the TOS app. It is available for Android as well as iOS. And if you want to contact us, you can contact us on these numbers. You can write to us at info@option school. Do like this video and share this video to somebody whom you think it will be useful. Thanks for your comments in the last video. All of you have your masters in options, and the kind of comments we got, and more than 90% of comments were bang on target. Whatever I was looking for as an answer, all of you gave that answer. So go ahead and write your comments in this video also. And if you have not subscribed to the channel, go ahead and click on the subscribe button. Another good thing which we have brought for our TOS subscribers, if you want live mint subscription where they have a lot of premium content, a lot of useful information about markets, about general economics, about general finance is available in their premium content. So you will get 25% discount. The discount code is again given in the description. So just go ahead and see their trial version if you find things useful. And if you want to subscribe for, let us say, 6 months or 1 year or 2 year, use this coupon code and you will get straight 25% discount while making the payment. Have a great day and wish you all the best for tomorrow's expiry. Hopefully all of you will make decent profit. Thanks for watching. Good night.